Your CPA will either make you money or cost you money. There is no middle ground. The reality is most taxpayers, they show up in either March, February, or April, and they bring all their tax forms and they say, here, CPA, file my taxes. So when that happens, over 90% of all the strategies have expired. That, my friend, is what is called tax compliance. That is not tax planning. That is another fancy way to say that you're probably, I will say, most likely you're overpaying taxes. Today I want to share with you a reality about what most CPAs or what most accountants will not share with you. And that is that the reality is that when you talk to our CPA and you hand them all the paperwork in March, that is not what tax planning is. There is no value in that. All that is just filing forms. The reality is that if you want proactive, if you're looking to actually save on taxes, doing it the right way, you have to take a proactive approach with your CPA and work on the strategies that apply to you as the individual, as the taxpayer. Because the reality is, most taxpayers, sometimes there's so much information out there, so much information, so much misinformation that it's so easy. I've seen it with a lot of my clients and prospective clients when they show up and they say, okay, I heard in TikTok that, I created my company and now I'm an S Corp. And it's like, that's, just hearing an advice on TikTok not from a professional, it's not a proper tax planning strategy. So today, my approach, my goal is to just share with you some of what I feel would be most valuable to you, which is the approach that we take here at Upfront CPA. And I want to share with you some of the things that you want to talk to your CPA, some of the timelines that you want to discuss with your CPA, that I feel that I know for a fact, based on my experience, are gonna flip the script from you just being tax compliant and just filing form into a proper tax advisory, tax planning that is gonna make a difference to you when you actually file your tax returns. Okay. Thank you, folks, for joining my channel. My name is Julian Gonzalez. I'm one of the managing partners here at Upfront CPA. I've been on this field for over 15 years. I work with businesses. I work with professionals, with high net worth individuals, investors, and families who want more than tax preparation. They want year-round strategy. And today, I'm going to talk to you what most CPAs will not say aloud, and that is your tax outcome depends more on when you talk to your CPA rather than whatever forms that you bring into them, okay? And I feel like this is gonna be a really good conversation to have that you think about, that you sit down and you discuss it with your CPA, okay? So the first thing I wanna talk about is what is tax prep versus tax planning. Okay, so basically tax preparation is easy. It's just reporting tax history, right? It's just being compliant. It's just basically you show up is what most taxpayers do, to be honest, is they just show up with a bunch of receipts, a bunch of paperwork that may or may not be relevant. And then they tell your CPA, okay, give me the miracle. Give me some miracle here. I overpaid last year, right? See what you can do for me. The reality is that this is not looking forward, this is looking backwards. There is no real value there. You don't know how many clients I've had that have come either through my door or I have talked to and given advice that all they do is just change CPAs every year based on hearsay about how much they should be having on refund or any kind of nonsense that you would not believe they say. So But but that's basically it. You just show up. Tax preparation. That's all it is. It's just making sure that you're providing all the forms. Now, I'm not gonna take importance away from that, because it's at the very least, at least if that's what you're doing, do it with a professional that at least knows what they're doing in that. From that angle, because even if at least even the tax filing portion of the tax filing is obviously very important, and making sure that you're filing the right forms, and that the information kind of follows the right pattern that the IRS is looking for, and that you're not missing forms, that you're not filing the correct information. So that is important also, but there is no value in that, to be honest. That's just looking backwards. It's decisions the decision has already been made. There's no value in that part of the cycle. So, what decisions can you make before all this happens? So, decisions that you can make before year end, before you show up. It's just want to give you some overview, right? Is when you pay yourself, how you pay yourself, when you buy equipment. How you structure your business. Am I an LLC? Am I an S Corp? Am I a C Corp? Do I have a chance to go back and undo a previous categorization that I used? How do I classify my expenses? Do I capitalize certain items? Do I get to depreciate now? Do I do the single? Do I do the straight line depreciation? Do I do the double depreciation? Do I get any 100% deduction? How do you time your income? Is it worth doing all my income now? Should I split some of them this year, some for the following year? How do I this is probably the most important, is how do I maximize my deductions legally? Okay, legally, because as we all know, you have the choice of putting some fake or ghost deductions there that are very at the very best very questionable, right? Because you don't have proof, you don't have way to support those deductions, and this is a form in which you can actually do it the right way. And in case the IRS comes knocking, you have the proof that your deductions are really applied to you. Okay, so a CPA that sits down with you before year end and plans all of this will save you thousands of dollars. Okay, you heard that right. Will save you thousands of dollars. Okay, legally, professionally. Okay, and then anyone that just does your return, right? Anyone that just takes you on. Not that there's anything wrong with that, but if they're just taking you on, if they're over-promising you, it's probably a lie, okay? Because the reality is that you're leaving so much more money in the table that you ever realize, okay? You can just do if you don't believe me, or if you're still kind of questioning the whole thing, just book a consultation with us. Talk with a tax advisor that knows what they're doing. Just do one consultation for them to just giving you an overview of the different strategies that you could have used during the year, where you can see the difference, and you will see the thousands. It can even be tens of thousands of dollars that you're leaving on the table. I don't want you to do that. Okay. Having said that, I want to move on into what are the critical moments you should talk to your CPA. Okay, this is one of the most important things I talk to my clients, right? Part of my job as a CPA is kind of walk my clients through some of those critical times, right? And also educate people, right? Because it's not people's fault. It's not to the fault of their own that everyone thinks that they just need to show up in April and March and just bring all the forms and get some of them have described as the worst experiences of their life, some of the most dramatic and high anxiety timing, because they, it's such a chaotic and driven and just terrible time of their lives, because there's a lot of ambiguity, there's a lot of anxiety, there's a lot of unknowns about all these tax process, that it's just chaos for them, right? So my job is to walk them through critical times so that doesn't happen. I can't tell you the difference between someone that has been planning their taxes during the year, especially those high net worth individuals, those businesses, when they do the proper planning, when they kind of, they get with their businesses, they look at their cash flow, they look at their revenue, they plan for the taxes. The difference between those folks and the ones that just show up in March and April, it's just night and day. Okay, so this is where entity reviews, elections, estimated tax planning, and compensation strategy happen. Okay, this is when when you're making the cake, that's when it happens. Okay, when you're putting the ingredients together. Okay, so money decisions must be made now, right? Okay, so and this is where kind of it gets a little bit confusing, right? Because we're talking about those folks that are showing up. Okay, this is my one time of the year I do my taxes, but the reality is you need to plan for the following year. Right now is when you look at 2026 and you strategize so that you don't have to show up in 2027 and create the same cycle, the same vicious cycle that is just it's not only giving you anxiety and problems, but it's also leaving money on the table. Okay, so let's give it a timeline, right? So let's say the beginning of the year, January through February, right? So that's when we're looking at estimated payments, we're looking at entity reviews, we're looking at compensation. Those decisions we kind of walk through now, right? That's kind of like in January, February, okay? That's when you're kind of mixing that, okay, I'm finalizing the prior year and now I'm setting it up so that the following year is even better. Okay, that's critical timing. So one thing goes hand in hand, right? Once you get that tax advisory during the year, you have some time. You have January and February to plan for the following year. Because what happens if your plan is only to show up in February, March, or April just to file your taxes? There is no planning there. You haven't. So you kind of thrown that timing off the table. You're not going to worry about, the reality is you're not going to worry about taxes until the following year, leaving money on the table, okay? So that's the first couple months, right? So around mid-year, let's say May to August. So what do we do there, okay? So also very critical timing, because now we're looking at year-to-date profit and loss. We're looking at payroll alignment. Am I paying too much in payroll? Do I have room to add more payrolls? Should I pay myself more if I'm an S corp? Do I need to hire more people? Can I hire my kids? Is my income projected to be higher than the following year? Am I actually being cash strained? Will I have some cash flow issues? What can I do? Should I start looking at purchasing some equipment? Do I have the income to afford to pay it now instead of getting a loan? Should I draw on a HELOC, on some kind of line of credit? This is the time to do that. Okay, depreciation. Am I depreciating correctly? Do I have did I take all the depreciation the prior year? Did I have some leftover for the following year? Retirement contributions. Right? What's the strategy that I used the prior year? Is it valid for this year? Do I need to make a switch? Has my income increased? Has my income decreased? What do I need to do? This is the time to do it. Okay? So that's Q2. So Q3, right? So now we're getting into that now towards the end of the year, right? The beautiful thing is now you've taken care of the hard part, right? Now you've done Q1, Q2, you have some insight into your business. You know what's going on. Even if you know about your business without doing this helps you because now you put in the tax perspective into your situation, right? How many people, they plan their business, they look at their bank account, they see the cash, and they're happy, right? A lot, and I'd be happy too. But if you don't know that maybe 30-40% is going to be taken off of that, when you file your taxes and you don't plan, it's going to be a big problem. Okay, so Q3, so it's your final tax modeling, right? Now it's when you kind of putting those little pieces on the cake before it's done, right? This is where we decide whether to accelerate expenses, whether to defer or pull income forward, or whether it's time to purchase equipment or an investment before year end, right? This is where you plan, this is where you look and you make realistic decisions based on the actual numbers and not just guessing, right? Can't tell you how many clients have called me and say, hey, I'm thinking about doing this, okay? So you need to consider all these things before you're able to commit to that decision. Do you know? No, I don't know, because I don't talk to my CPA during the year. So terrible mistake. So we're done with Q3, so now we're looking at December, right? In December, the reality is most opportunities are gone. Now we're only able to kind of put that icing on the cake. This is where we only have chance to make our final decisions, okay? And this is where, like, if you didn't do it and you only show up in December, it's almost the same as showing up towards the end of December as of showing up in March and April, right? It's almost the same. And I've had situations with clients that they feel better because they actually showed up with their CPAs on the year of the filing, because they showed up on December 30th. Might as well have been February or March, because you may have reduced, instead of 90%, all the strategies gone, maybe it's 88, right? You may have 2% more, which it's not gonna make a difference, right? That's why we do it during the year. So you missed a big window there, okay? So that's, in a nutshell, just kind of like a basic, right? Strategy-wise, how those critical times that you wanna look at, right? So now is the big question. How does your CPA make you money, okay? So I'm gonna break it down into a few buckets, okay? There are plenty of strategies, right? And by the way, I should also mention as a disclosure that this is not advice to everyone, right? You should always consult with your CPA to make sure that any of this applies, okay? Everyone's different, and contrary to what you might hear on TikTok, the strategies don't work for everyone. It depends on your situation. You should always consult with your CPA to make sure that is the case, okay? But I do wanna kind of emphasize high level, broken down into pieces, in my experience, how a CPA will guaranteed make you money, okay? So entity selection, okay? So choosing the right tax selection. Are you an LLC? Are you an S Corp? Are you a C Corp? Are you saving on payroll? Are you tax compliant? Are you paying the right estimates? Are you having the reasonable compensation formula correct? Are you off? Do I need to raise my salary? Do I need to add more to my payroll? So that entity selection will make or break you. Okay, every entity that you choose has some responsibilities in terms of requirements that you need to consider. So doing it right will make a difference in your wallet. That's number one. Number two, depreciation planning. Okay, cost segregation, bonus depreciation, Section 179, the deductions and decisions, right? So very important, and these are all part of a strategy, okay? So let me just give you an example. You don't just show up to your CPA and say, hey, give me a cost segregation. Obviously, there's part of some broad and bigger picture part of a planning where you might be looking into adding some real estate into your business, getting some added money. If you have extra money that you're looking to invest, real estate is a really good opportunity for you. You add that cost segregation there, right? You're looking at some equipment that you're looking to add. You can do the 100% bonus depreciation that you can take care of it. I'm thinking about buying a bigger vehicle, that 6,000 pound threshold. Does it make sense now so that I can expense it now? This is the time to do it. This is through the depreciation, the planning. This is a key component of the the decisions that will make you money. Just right there, we're talking about thousands and thousands of dollars just on that specific planning, right? Payroll optimization, okay? Reasonable compensation strategy for S corps, right? This is what I discussed earlier too. Part of that entity selection, right? So then there's the compensation part, right? This is a top IRS audit area when done incorrectly, okay? This is unfortunately it's one of those where we get the opportunity to get that strategy, but if we don't do it right, you're gonna pay a high unfortunately a high price for that. So, and then there's the next one, is the real estate strategies. Okay, so do I do passive? Do I do non-passive? Do I do the short-term rental loophole, which I spoke on one of my previous videos? This is a real big one, right? Real estate is one of the top options that investors, that high net worth individuals that have additional income, that have extra resources that they may want to put away, that they have that opportunity to do so. Okay, so retirement strategies. Okay, do I set up a 401k? Do I add to my 401k? Do I do the SEP IRA if I'm a self-employed, right? Only valuable and established early enough. You can only get this done right if you do it at the right time. Okay, estimated tax accuracy. Okay, very important. This is where avoiding penalties and interest comes in, right? It's a calculation that you gotta work with your CPA, right? You gotta look at that safe harbor rule, right? Do I pay 100% of my whatever I generate this year, 90% of the previous year? So there's some component there that you need to look to avoid penalties and keep more money in your pocket, right? Year-round document and expense review, right? This is like fixed issues, right? This is the time to go back at some of those expenses, right? Am I expensing this correctly? Is this going in the right bucket? Is this even allowable? Right? You want to kind of strategize it during the year so that you know ahead of time, and you may be able to adjust towards the end of the year, right? And this is one of those that, again, is going to put money in your pocket if you do it right, because there's nothing like preparing for the outcome, okay? So now I want to give you like a real life example, okay? And this is where I want to illustrate this for you. Okay, I had a client that came in and had probably somewhere around $90,000 to $100,000 in taxes due this year, and it was because they did the cost segregation right. They did the first part right. The first half was done correctly. They purchased a home. They did the cost segregation. That one time was not done with me, unfortunately. Review their taxes. They got somewhere about $20,000 in refund taxes with their 1040 that year. Was maybe 3 or 4 years ago when they did the cost segregation. Okay, beautiful. This is a strategy that works. Cost segregation is one of the strategies that I work most with my clients, where the highest value shows up on your on the taxes that you save and the money that you make when done correctly. Okay, the thing is, cost segregation is a long-term strategy. If you're looking to buy or purchase a home and you cost segregate it and you sell it only a few years after, there's what is called the depreciation recapture. What that means in so many fancy words is you may have to pay all of that back. So guess what? All that money that he was able to save and even get a refund for, he had to pay it back because he did not plan accordingly. Okay, lucky for him, he was able to talk to me during somewhere about half a year, and we were able to. He actually invested. He had enough money to invest into a new property, do the cost segregation again, and kind of offset that cost segregation that he had to pay back because he has sold that other property. So this is like some of those real case examples that you want to look at, that I want to illustrate for you so that you have some kind of like an idea of to illustrate my point, right? Why this is not just to sell you a service. This is not to just try to get you to, do something that you don't want to do. This is real. This is what are you gonna find the value where not only the CPA can actually save you thousands, but that they can do it in the right way. Okay. So how a bad CPA costs you money. Okay, I already showed you the good side of the coin. Now I'm gonna flip it and I'm gonna kind of show you what it looks in the other side of the spectrum, right? So this is where people get burned. This is where anxiety. This is where problems. This is where even some marriages get in trouble, because this is the time of the year when Uncle Sam comes asking for their portion, and because you didn't plan with your CPA or because you didn't do it right, it's gonna cost you money that you did not plan. Okay, so if you file late and reactively, it's not proactive. So you just stuck with whatever you got unless you start making up some expenses, right? Something that don't recommend, something that is gonna cost you even more in money, and then even worse in your state of mind, because it's you're not doing things right. Okay, they don't talk to you about if they don't talk to you until it's too late, right? So many I've heard of CPAs that their clients try to talk to them to the end of the year, and they'll say, no, I just talk to me in March and April. Okay, so that right there is gonna take a hit on your wallet. Okay, for sure. Okay, they don't understand your business model, and they don't understand, but they don't attempt to understand, right? So they don't look into analyzing your business, how you operate, enough so that they can actually help you. Okay, this is one of those silver bullet blank advice you get from TikTok, right? Anyone can do that. I can just sit down here and say, okay, so do an S-corp, everybody, and you'll be happy. I mean, that's not the case, right? I'm not understanding your business. I'm not checking how your business operates. My advice there is just completely no, and should not be taken, okay? So they never model your tax liability, okay? So they're not projecting what your tax bill is going to look like, okay? So, just right there, it may not, even if it doesn't cost you money, it's costing you headache, right? You're flying blind. Okay, as part of your business, you should know what your tax liability is, or is projected to be somewhere thereabouts, so that you can kind of plan accordingly. Okay, they don't track your basis. Okay, very important. You need to know as your income grows, or as you start reducing or scaling, what your basis is. Okay, and your basis is really important when it comes to, for example, when you're actually passing through some losses into your personal filing for some of those pass-throughs. It's important that you track your basis, because you're only allowed to pass enough losses or certain things that you can do that you can only do up to your basis. So you need to know how much your tax basis is on a yearly basis. Okay, they push deductions without understanding audit exposure. Okay, so some CPAs will kind of just throw you under the fire. They'll say maybe something like, I think that this should be okay, because the reality is, at the end of the day, you're responsible for your taxes. Okay, unless you can prove that your CPA or your accountant was completely was just giving you knowingly just giving you terrible advice, there's not much you can do. So the tax liability comes to you. The IRS is gonna send a letter to you, not to your accountant. Okay, so don't follow for their neglect on that situation. Okay, they don't plan for payroll, S corp elections, or depreciation timing. Right, everything that I walk you through, like on the time guidelines, it's gonna cost you money. Okay, they don't warn you about upcoming changes. Okay, this is where also helps to be proactive, right? Because then you can kind of not only look at what have you been doing so far, but also getting ready for some of those things, right? This is kind of a big thing last year when they had the big beautiful bill, right? So unless your CPA was kind of being proactive on that front and was educating themselves on what was going on, there wasn't much that that could help you, that they could show, that they could give you in terms of value from that what was coming. Right here out from CPA, what we did is we were kind of following all the law there, the new things that were coming. Obviously there with some caution, because there was a lot of things that were discussed and not everything passes, right? But it's important that you start educating yourself and that you talk to your CPA to make sure that they're following with all those things, right? So tax season is where mistakes show up, right? But mistakes were made months earlier, right? So this is when you have the conversation with your CPA, right? When you're in March and April and you're having all that anxiety, you're not happy with your tax bill, this is when you have that conversation. Can we turn this tax preparation into a tax advisory? Okay, if the answer is yes, go for it. If the answer is no, I think you should probably look for other options, okay? So what year-round work with a CPA should look like. Okay, so now I'm just gonna give you that kind of high-level summary of what working with your CPA should work, right? So the best CPAs don't sit in silence in tax season. Okay, the real advisor relationship includes. Just gonna kind of bring them down to you. Okay, quarterly check-ins. Okay, and it's not, hey, how you doing? What's up? How you been? No, it's let's sit down. Let's look at your financials. Let's look at your year to date. Let's do a year to date comparison to the previous year. What are some of the things you see coming? Do you expect things to change in the future? Obviously, we don't have a crystal ball, but maybe there's some information that you may be aware of that you didn't think of that could actually affect the business. It's a good time to kind of go over that, right? Mid-year P&L review. Okay, entity election review. That's not a constant. Okay, just because you elected to be an S corp, you may not be an S corp forever, or you were not an S corp before. Now is the time to do it. Okay, so this is the time to review that. Payroll analysis. Am I paying myself the right amount? Depreciation planning. Okay, retirement contribution strategies, real estate planning, year-end modeling. Right, support before big purchases or financial decisions. Right, this is the best time. Not only because I want the equipment, because because my neighbor got it or my competition is doing certain things, is the time for me and my business to do it. Right, so that's the difference between the CPA who simply files your forms and the CPA who protects you, and most importantly, who supports your money. Okay, so this is going to put an end to my video. I hope you enjoyed. I hope that you are grasping what I'm trying to, the information that I'm trying to pass to you, which is, be proactive. Tax is a burden, but it doesn't have to be a burden that brings you down, okay? Talk to a good CPA. You will love the CPA who will save you money. You will see the difference, and you're gonna be happy to actually be working with them year round. Okay, I'm very happy to talk to you. If you have questions, if you have concerns, if any of this makes sense, or if you have some comments, put some comments there on the link here on our YouTube channel, and we'll contact you and we'll arrange a meeting, we'll arrange a consultation or a free discovery. Well, folks, that's it from me. I'm Julian Gonzalez, and I hope to see you on our next video.